Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back, everybody. Been quite an interesting time period. Not so much for markets. I mean, it's okay. They actually ended up positive last week. It peaked out around Tuesday, and then Wednesday, Thursday, it went down a little bit, and it went up a little bit on Friday. Nothing really to speak of, and just stuck within a small trading range there. And so that's good. This time of year, markets are normally pretty slow. They have a tendency to stay pretty slow right up until about September. And September typically, it actually can just toss a quarter. And which is really what you, if you're trying to look out over a short time period, if you actually make some money doing that, it's because you got lucky. And there's a large element of luck into investing. We'll talk a little bit about that later in the show. Also, the need to have some secure income, whether you're looking at short-term treasuries or if you're already retired and you'd like an income that's higher than you can get in treasuries or CDs right now. That's guaranteed for as long as you live. We'll talk about that too. There are a lot of fixed annuities. I have one particular type that's my favorite because you have a chance. It's not I'm not going to say that it's a high degree of certainty that it's going to outperform the guaranteed amounts. And that's why the guaranteed amounts are so important because they form the base. But you have an opportunity, and you never know. If you had another period like we did in the 80s or in the early 2000s, yeah, that would be great. You would get the gigantic returns, and you would be able to lock them in, and then you could take an income off of that much higher number. If it doesn't happen, the guaranteed numbers are pretty good anyway. So we'll get back to some of that. If you'd like to give us a call, the number call in is 216-901-0945. If you hear anything you have questions on you'd like to talk about, you can always email me. It's Bill at Bullington Capital, or you can go to my website, bullingtoncapital.com, or you can just call us, 330-664-0700. And I must say, I kind of like what I see on the stock side. Yeah, it's pretty interesting. I have a tool that scans all stocks, and it does it on an ongoing basis during the day. And stocks that meet certain criteria are coming up on the scan, and they're companies that are going up pretty quickly right now. And I just like to keep tabs on that. I don't really trade off of it a whole lot, not nearly as much as I used to. But occasionally I'll take a shot at a stock, and there's a strategy I use that was developed a long time ago. It's super simple. It's highly effective, and maybe the next time we do a seminar, I'll bring it out and show it all to you again. I've covered it before on past seminars. Just amazing to me how well this thing has held up, this methodology. And when you think about it, it's really because it's just basic logic, and it's simple logic. And I will take simple over complicated any day. But and not just because I'm getting older, but I just think the simpler you can make it, the better. You don't want to leave anything out, and that's for sure. You definitely don't want to leave anything out. But if you can make something simpler, I think you should. Just a personal opinion there. and that's why I never run for government. But yeah, anyway, um, yeah, I was kind of surprised at the number of stocks that came up on the scan. I'm looking at there's 77 of them. Uh, if I if you could look a little further into it, there are a lot of financial service companies. There are a lot of retailers. I'm surprised because the data on consumption, the economy's been slowing down and going into. They're talking about the recession that's happening, and it's already, the economy's slowed down quite a bit. But so why are retail stores coming up? Heck, Walmart came up, the biggest retailer there is, and it comes up on a momentum screen. That's pretty funny. So there may be some surprises. Maybe the market's actually going to pick up this fall and take a small break in summer like it normally does. August is typically the slowest month, but takes a little breather here, and these companies start to get their bearings, and that's basically what I think has a pretty good possibility of happening. When you're seeing retail across the board that are actually one of the leading categories in the stock market, that's pretty good. And that's really good for short-term forecast. Now, that can change at any second, by the way. That's not to say that they're going to keep running like this, but it's just a good sign that they are. It's kind of like not wanting to get wet by getting rained on. Your best bet against that sort of thing is to look out your window before you go outside. And I know that seems so totally obvious, but you'd be surprised how many people don't. And it's not as easy with the stock market. You have to have some software, like the software I have. You have to have the parameters set up, like I have my parameters set up. But once you get that done, and it's like I'm looking out the window, and what I see now, it's encouraging. So that's good. Again, that could change tomorrow. That's their stocks, and that's one of the reasons that you want to have a portion of your money in something that's relatively safe. We've got a fund that we use. I like it a lot. It's actually an exchange traded fund, and it's got all short-term fixed income in it. The current yield on it is over 5%, which I think is pretty good. I'm very happy with it. You can actually get some 5% CDs. You can get, well, I shouldn't say that because the rates change by the day, and I didn't check all of last week. So they were close to 5% the last time I looked. Let me put it that way. I think a lot of money market accounts, money markets are actually mutual funds. A lot of people think they're savings accounts, but they're actually mutual funds, and they buy specifically short-term debt. They'll buy bonds from the government. They buy bonds from investment-grade companies. The shorter the bond is, and oftentimes what they're buying, there are lots of names for it. Commercial paper. There are tons of names for this kind of stuff, but they're normally short-term. They have a relatively high interest rate, at least now they do, and it's going to mature in just a few months. So it's considered very liquid. The vast majority of it, the ones I like to use, just stick to government bonds. I don't even want to take the risk of a company going belly up, and then the money market securities that or securities that they sold that are purchased by money market are generally the safest that they have, but it's not like having a treasury. So with treasuries, you don't worry about it. That's the nice thing about having a government that's got a separate Federal Reserve. If they need money, they literally just authorize it and then print it. So, and then put it in circulation. It's a little more complicated than that, but it's one of the reasons that we never have a run, or haven't had a run on banks in a really long time. Sometimes, occasionally we get a run on a bank, but that's because the lending that the bank has done. Their portfolio got a little too aggressive. Economy started to slow down. Some people stopped making payments, and then you hear about that everywhere now. It goes on the internet and NBC and all the other cable channels that are out there. It is mind-boggling. You want to hear something funny? My software that does the searching of stocks, it just updated for no reason. Yeah, right in front of my eyes as I was watching it. That is hilarious. But anyway, there's some pretty good names that came up on that. Yeah, so I'm really thinking that this is a pretty good time. And there have been some changes with RMDs over the past few years. They've actually pushed out the required minimum distributions, so that's kind of a good thing. The longer you can keep the money in an IRA, the longer you keep the tax deferral, and that money that you would have been sending to Uncle Sam is to stay in your account and earn more money. So this is that's been a pretty good thing over the past few years, although it is very aggravating to sit down and read through all this stuff and then try to figure out what category you belong to. Are you supposed to be taking them out? When are you supposed to be taking it out? And it is that part of the IRS's job, I guess. It's I wouldn't want that at all. It's incredibly difficult to keep up with it as an investor. Never mind the people who are writing the rules. You should see that stuff. It's like a book. Yeah, it's mind-boggling. They would try to make something that complicated, particularly when it's affecting older people. And it's that's just not right. And if you think that's complicated, you should look at what you can do with health savings accounts. That's nuts. You should look at what you can do with 529 plans. They've added so much legislation to that stuff over the past couple of years. You have to keep checking for it. By the way, when somebody calls in and says, "Hey, can you? I have this question." I have to go. Okay, well, I'm going to have to write it down, and I'm going to have to look it back up again because this stuff has been changing so quickly that from 1 month to the next, literally, it could have massive change. And I guess when I was younger, I really didn't mind. Now that I'm getting older, I'm looking at this going, I remember my grandparents talking about all the change that was coming, and now I kind of see what they're talking about. But and it's faster today, though. I mean, the level of change is mind-boggling. The types of funds that have come out now, mind-boggling. It's fascinating. And I thought this, by the way, I thought this was going to happen a lot earlier. I mean, I left 20 years ago to start my business, the Bullington Capital Company. I thought that the developments that we're just now seeing, I thought they were going to be here a lot earlier than they were. Boy, was I wrong. And now that they are here, we've got to take advantage of it. And I don't think it's going to go back to the way it was, but it will change. It's going to change at some point in time. And so let's see here. I wanted to talk about give you a couple of specific examples of some people who were getting ready to retire, looking to build up some income. When you get to that point, by the way, there are no set and forget rules or rules that will apply to everybody. Everybody is a little bit different. Everybody. I've never seen two clients that were identical. And oftentimes there's a big difference in philosophies between spouses. So our job is to try to explain all the available options. You get to pick what you think would be most suitable for you. If you ask me, I'll give you my opinion. But I got to take a real quick commercial break. This is Bill Bullington. I'm right here on 1420. Stay tuned, because we'll be right back.
Smoke clouds all around, couldn't see your face.
Let's face it, there's a reason Cleveland homes have a stormwater drain line.
Basement flooding can be a real issue thanks to Lake Erie and spring showers.
Now, we hope it's not a problem for your home, but if it is, you know what we're talking about.
And you probably have a sump pump installed, if not more.
What we'd love to do for you is inspect your sump pump for free, because we don't want you to discover problems after things get wet. We'll ensure your pump powers up, turns on, pumps water, is sized properly, and hasn't collected debris in the basin or sump. A full inspection at no cost to you.
And if any problems do turn up,
You'll have just saved yourself some real spring shower headaches
and our straight-talking, hard-working, do-it-right plumbers will show you the issue.
and explain all your options for a fix. Because no Cleveland homeowner should get surprised by basement flooding.
So call for a free sump pump inspection and
Consider it done at WyattWorks.com.
Wish there was a place to find good, clean, family-safe entertainment? A place with no violence or profanity? Where you can let the kids roam free? That place is the all-new GodTube.com. Watch inspirational videos that'll challenge and motivate. Catch the latest music videos from Christian artists like Jeremy Camp, Hillsong, and Chris Tomlin. And share a laugh with clean comedians like Tim Hawkins, Anita Renfro, and more. All free, 24/7, right in your own home at the simple touch of a button. Visit the new GodTube.com. That's GodTube.com.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit JoyceFactoryDirect.com.
And we're back. Hey, this is Bill Bullington. I'm here every Saturday morning, 11 to noon. If you'd like to call in today, the number is 216-901-0945. And I'm going to go to the phone right now. I've got Chris in Brecksville with a question.
Hey, Bill. Bill?
Hey, how are you?
Good. Good. Beautiful day. Hey, can you hear me? It seems to be breaking up a little bit.
Yeah, I know. If we got
Okay. All right, let me walk around my house. Is this better?
Yeah, that sounds better. I think so.
Okay.
Yeah. That's a little worse. Now I can't hear you.
You gave the example that you put $100,000 in and they'll pay you out, I don't know what it was, $7,000 or $7,500 a year.
Yep.
Correct,
Yes.
correct?
Right. Yep.
So my question is, okay, you buy an annuity, you do this, and 10 years from now you're dead.
Right.
How much is left in that annuity that goes to your heirs of that $100,000?
Yeah. Well, it depends on how the stock market does. The guaranteed income is for your life for as long as you live. And
Right.
then when you pass away, they'll take a look at what the investments have done. You have three choices in there, three different indexes. And however that's done, they will take the remainder and pass it on to your beneficiary. So it really there's no way of knowing.
Okay, well, my comment would be, since you can get a guaranteed rate of like 5,000 to 5,500, and then and you do a 10-year annuity, as for an older
This one
person.
this one was 7,750.
Yeah, wouldn't you be better off just taking the guaranteed interest, and then worry about 10 years from now if you're still around what you do with it? Because it seems to me you'll have $100,000 left still to pass on to your heirs after they paid out $55,000 versus $75,000.
Yeah, it really depends on how well the underlying investments do. The guaranteed income level is if for somebody who just wants to fixate on that income, you could take out whatever its earnings were, and they're guaranteed to. Well, the guarantee is to get back 100% of what you put into it. Let's say you put $100,000 into the S&P 500, and you started taking money out, and you have another 2000 through 2003 on your hands. The market goes down 50%. You're still taking out 5%. Which now you're taking out 10% because the market got cut in half. Okay. That's what we're trying to avoid.
Okay, right.
And that's what you're avoiding. So realistically, I mean, you might be able to beat the track record of the guarantees. I'm just telling you, with all my experience, it is really tough. I mean, you're gonna have to pay extremely close attention. You're gonna have to watch your spending. You'll probably have to adjust your spending along the way, and then there's still no guarantee that you'll do better. So it's really for people who just don't want to go through all that work. And
well, it seems it's for younger people as opposed to older people.
I think probably somebody if you're above the age of 50, you might want to take a look at it. If the older you get, the more beneficial it gets, because your life expectancy, it's like a reverse mortgage. The older you are, the higher the payout you'll get. And then if you live to your 100, like my great aunt Nell, who just passed away a few months ago, she would have still been collecting, all these years from having turned it on. So, yeah.
Yeah. But in my example, it just seems like they've paid you $55,000 over 10 years, and you still have your $100,000 on a fixed annuity. Whereas, if you die, that you're only going to get $25,000.
Well, you don't know what you'll get back. You can't possibly know that, because you'd have to know what the market's going to do in advance.
Okay.
And because in this type of product, it's not a fixed product. It's actually they're investing.
Okay.
They're actually buying options on the index. That's why they can guarantee the principal, because they really don't have all the money. It's not in an index fund. They're buying options on an index fund. And most people that do what I do for a living don't realize that. they really don't know how they're investing. And I just can't work that way. I have to know, exactly what I'm doing. And I'm going to tell you, these are hard. I mean, they're really, to be able to make those types of guarantees, it's complicated. And it's not going to be easy, ever. And so you have to look at, as a consumer, you have to consider what are the guarantees that you're going to get. Forget about how they're calculated and how they're invested. You're going to spend the next 2 years studying if you want to learn that, at least.
Okay.
And so just look at the guarantees and then compare them to others. And always look at the guarantees. Don't listen to a sales pitch who's telling you how the money's invested, because half the people that sell these products don't know anyway. And it's pretty funny.
But on a fixed annuity, they're giving you that fixed interest rate. For the term that you choose, whether it's 3 years, 5 years, 7 years.
Well, that's one type of fixed annuities. Yeah, there are tons of them. So what you really have to do is figure out, what you want to do, and where you think the best fit is. And we do fixed annuities all the time. I will tell you, the vast majority of them don't have as high of a payout guarantee. So it really depends. Again, it comes back down to, what do you want to accomplish? If your goal is to get a decent income that you can, and a lot of them, you can take the interest out, and you can't take interest out first. It's a very complicated calculation, but you can take money out of it while you're alive, and you're still going to get guarantees, but it's going to be affected by how much you took. And but you can get a guarantee that you can't get back less than what you put into it. Your family can't. So if you were taking money out and then the market crashed, your stocks were down. Well, this one you'd still get back at least the amount that you put in, minus what you've taken out. If you've already spent money, you can't get that back because you spent it. So you have to be.
Well, that's why I say if somebody's like 70 years old, it seems a fixed annuity would be better because.
Well, it depends because depends on how much income they need.
You'll take out $5,500 a year, and you'll still have $100,000 left after the annuity's over, and you can withdraw it all.
Okay, so this one, you would take out $10,000 a year for the rest of your life if you did live, and then whatever was left would go to your beneficiary. And so you're getting twice the income, and you can keep that income for as long as you live. And average life expectancy at 70, I think is in the early 80s, about 10 years. So
unless you have kids, and then you die younger now, they say.
Yeah.
I don't know if
actually,
you see that article?
A couple of years ago, I think the life expectancy actually shortened in the United States for the first time, and I can't remember how many years it was, but I was like, oh, wow, that's pretty funny. Everybody else is living longer, and we're living shorter. But
go figure. News media, that's the problem. The news media causes all the stress.
Yes.
Okay.
Yeah, I
okay. Well, I was just curious because I didn't understand how those work. Because, like you say, annuities tend to be complicated.
Oh man, they took something. I mean, they used to be so easy. You know, it was kind of like a tax. Yeah.
That's why I like looking at it and saying, okay, I'm going to get this fixed amount of 5.5% until this is over, and I get my money back.
Yeah. So. Well, go to let's see. If you email me, I'll email you a link, and you can go play around with the numbers on a Nationwide site. You can put your age and how much money you're investing there, and it'll give you a nice idea of what those numbers are.
Okay. All right. That's it. Thank you.
Okay. All right. Bye. Well, have a good weekend. Thanks.
You too. Bye.
And by the way, that goes for anybody. If you'd like to get on the website, and you can put your age in there if you're married and you want to have a partner there. Let's say if I go, I want my partner to continue to make the same amount of money and continue to get paid on the product. It's really easy to do. And if you have questions, and you will, unfortunately, this area has not gotten easier over time. There are always tough questions. That's a really difficult. One of the difficult parts about retirement planning in general is how long am I going to live, and how well will financial markets do in the future? And I see in most cases, to try to come up with a number that you can guarantee is incredibly difficult. I mean, think about that. How long am I going to live? And what are the financial markets going to do? You can't know the answers to those exactly, so you have to estimate. That's where a product like this comes into play. It says, well, it doesn't matter how long you live, and it doesn't matter what the financial markets are going to do. You're going to get this. Okay, and that is I have a portion of my money in it. Actually, it's fairly significant. And I'm just like, hey, this would be great if I just got this amount of money, and I got my Social Security. I'm good. So the rest of the money I have invested kind of aggressively. Actually, I think it's like a 75% stocks and 25% fixed income, traditional fixed income, and so I feel like I'm really good to go, and very nice to be relaxed, not have to worry about it, no matter what happens. So that's really kind of what you're buying is peace of mind with that sort of thing. I have this much, I'm just putting it away, and I know worst case scenario is I can fall back on that, and the very good feeling. And didn't think I'd actually ever get to this point, actually. But so it's helpful to be able to help other people when they're looking for that. And I'm trying to think here. I don't know, Letty, do I have another call? If you would. Okay, thank you. All right, I'm going to go to John. John, you're on the Bullington Capital Report.
Hello.
Are you there, John?
Hello.
Hey, John.
Yes.
Here I am.
Okay, I haven't talked to you for years. Not quite that long, but anyway. I have a question. One, interest rates is high for mortgage, I understand. So, and a lot of buildings are empty, the commercial buildings with a long lease. How is REITs on one hand and hedge funds, are they competing for the same space? Like Amazon is picking up all the malls and converting empty buildings to their own warehouse. So hedge funds are getting into the housing market. So individual is out even if the interest rate is low. I'm just curious.
John, you keep breaking up on me. Your phone's going in and out. I'm only getting a small.
I'm sorry. Okay, it's a hard question. That is, interest rate is high for average American. Is pretty much, hard to get a mortgage. That I understand. Some of the commercial banks, medium size, are exposed to long-term lease building. They loan money over the years. Not 2008, but there's something going on. And some of the hedge funds, they don't even want you to do due diligence. Give me the money. That's part of capitalism, they say.
Yeah. Yeah, I think I hear what you're saying, and I think I understand the comment. And yeah, when I'm looking at, if you look at the actively managed REIT from Alps Corporation, and the symbol is REIT. It's a fund.
Yeah.
It's actually right where it started in 2021. It went up fairly significantly, about 20% from where it started, and then it was down almost about 15% from where it started. Now it's like right back to where it started. But you've picked up the dividend that entire time period, and the average dividend yield on that thing's been about 7%. That's good. When it goes higher, yeah. So I don't. There are always going to be problems with real estate as long as you have bankers, and because somebody's going to make a loan that they probably shouldn't have made.
I just sounded off so that you can, for everybody's benefit, of course, not to mention the CEO, ExxonMobil, is suing their own stockholders for California pension fund. It's crazy news.
Yeah, I know. There's so much.
I keep track at 89. I'm still keeping track of it, all these. You know that.
Yeah. Yep. I think today.
I listen to you. Keep up the good work.
Oh, thank you. Have a good weekend. Bye. Yeah, actually, like I was saying, REITs have they're right back to price levels that they were a few years ago. That's not always that fun. I get it. And I have industry REITs. Yeah, there's healthcare facilities. Looks like a long, very volatile sideways price movement. So you're still getting the income out of those, which, the average income from an average publicly traded REIT, it's about somewhere between, on the low end, it'd be around 4.5. On the high end, it'd be 9. So the average is somewhere around 7 or so. That's pretty good. But I got to take a real quick commercial break, guys. This is Bill Bullington. I'm right here on 1420. I'll be back after these messages.
I woke up with a broken heart in my chest. I couldn't sleep, couldn't get no rest. Weighed down by the heaviness of life. And I try to shake it, flipping through my phone, but all it does is make me feel more alone. How could anything that feels so wrong be right? 7 billion voices separate us.
I'm Kareem Abdul-Jabbar. I learned about atrial fibrillation the hard way. My symptoms would come and go. Shortness of breath, fatigue. I kept going. Then I got so lightheaded, I couldn't. My doctor said I have AFib, so I'm about 5 times more likely to have a stroke. Other symptoms, irregular heartbeat, heart racing, chest pain can come and go, but the risk of stroke stays. If you have symptoms, tell a doctor. Visit notimetowait.com.
Sponsored by Bristol-Myers Squibb and Pfizer. Prescriptions require an online consultation with a healthcare provider who will determine if appropriate. Restrictions apply. See website for details and important safety information. Subscription required. Price varies based on product and subscription plan.
Hey guys, did you know there's a generic form of Viagra that works just the same, but is 95% cheaper? And you can get it online? Go to hims.com/joy. Through HIMS, you'll get a free medical consultation, discreet shipping if prescribed, and the process is 100% online. To start your free online visit, go to hims.com/joy. That's HIMS.com/JOY.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as 1 day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
I can't believe it. You came through.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you'd like to have a conversation about your investments or doing retirement planning, just feel free to give me a call. It's 330-664-0700, or you can go to my website, and I'll try to call you back as soon as I can. Been pretty interesting the past few months. It really market's a lot stronger than it looks. You're looking at companies that are doing well, and I like to look at charts, and I go and scan the entire stock market. And when you've got a day like Friday and 77 names come up on my scan's pretty specific, and if there are a large number of stocks, like if you're getting over 50 stocks that are meeting all the criteria on that's a good sign. Right now on Friday there were 77, so I look at it and go, yeah, it's pretty strong. A lot of the companies are not overly extended. A lot of them are actually coming through significant points where you would say, okay, the trend it's definitely up now. So that's a good thing. But it's like watching, it's like predicting the weather. If you really want to know whether or not you should put on a raincoat, you should probably look out the window before you go outside. And that's what this is. It's the window. It's the window to the stock market. And right now it looks good. It's not good for long-term projections. I've never seen a product that was good for long-term projection, ever. And so anyway, I've been trying some new software out. I think this I'll be reporting on it more as time goes on. Yeah, it should help with some of the people that have individual stocks. And if you're interested in that sort of thing, and I got to tell you, I have less than 20% of my money in individual stocks. They're just too fast. They move too fast. And to have a whole lot more than 20% just doesn't make sense anymore, especially with all the products that they have out there available today, and they're so inexpensive, and the tax savings is phenomenal. It's mind-boggling. They lobbied Congress, and I'll have to come back into that on next week's show because I'm getting pretty close to the end of this one and don't have that kind of time yet. But from a tax standpoint, it's pretty significant. You're better off using exchange-traded funds, my opinion, than you are holding the individual stocks. And lots of reasons for that. And then with rates where they are, if rates continue to, if they keep ratcheting them up, despite the fact that the economy, it's working. The increase in interest rates is slowing the economy down. That's going to cause rates to go back down again. So if you've been holding on to short-term fixed income, that might, the income's probably going to go down. And that's one of the reasons I think it depends on your age and what you're trying to accomplish. But I think looking at fixed annuities is a good spot right here. You're looking over the next 5 or 10 years. I think the rates are going to be, it'd be incredibly difficult for them to get back up to the levels that you get that are guaranteed anytime real soon. It may happen, but I'm trying to imagine what could cause that. If you had an economy that was really overheating, so you got a 5% growth rate on GDP, and then I could see interest rates around 8%, but we are nowhere near that level, and the economy, it's slowing down. So there's a pretty good chance that interest rates start to fall back. It might make a lot of sense to lock them in at rates that they're at now, if you're thinking along those lines. And hey, if you're in your 40s, forget all that. I've got some strategies I'm going to put together for you for next week. If you're younger and you're just looking to maximize the returns that you can get, there are certain things that matter. They have a tendency to matter more than others. And it's pretty common sense, actually. And there have been funds designed to capture the extra benefit that you get from concentrating on, they call them factors. I'm not sure. I'm sure why. It's a marketing thing. But anyway, so these new factors, what are the factors that have the biggest impact on your growth? So again, if you're younger, you want to focus in on companies whose sales growth is high and whose profitability is good and potentially improving. Okay, so those are the two most important factors. The other one that's going to affect it is the size of the company and the speed at which its price is expanding or going higher. And they call that capitalization. I'm not sure how many people even realize that capitalization measures the speed of the underlying company. They just think it's, this is just what it's selling for today. Yeah, but if you look at the capitalization today and then you look at it 6 months ago, it was $1.2 billion today, and 6 months ago it was only $1 billion. It's gone up 20%. That's pretty significant. And so all that stuff in together, and I know half of you are probably bored to death now because of that explanation, but somebody's got to do it. And so yeah, I think we're in a pretty decent spot. That's what I'm really trying to say. Does that mean the market's not going to go down? Heck no. Market could go down at any time short-term moves are the shorter of a period you're looking at, the more likely it is that you're going to get it wrong. The longer you're looking at it, the higher the likelihood is that you get it right. And if you're not looking out over a very long time period, I think you're probably making a mistake. So anyway, if you want to take a look at the Nationwide product that I like a lot, I have it myself. You just email me, Bill at Bullington Capital. I'll email you a link. You can go in there and put your age in there and see how much income you might be able to generate. And there's a schedule there of, if you didn't need the money today, but you might need it 5 years from now, or you might need it 3 years from now, you can get a really good idea of what that is. And it's very, very competitive. It's going to be higher than CDs or treasuries. They're also, it's guaranteed for as long as whenever you start taking the income, that's guaranteed for as long as you live. And when rates start to go back down again, that might make you feel a lot better. Like I said, I purchased mine a couple of years ago. My rates they're very competitive with where they are now because they were so much higher than short-term rates were back then. So it's, everybody's different. That's one of the things I kind of like about the business. I've never talked to two people who had the exact same ideas. I've never had. And what's really funny is a married couple comes in and they have completely different goals. And that's kind of funny. I'll skip those stories. But anyway, it's good that if you have an idea too in mind of what you would like to accomplish, and I get an awful lot of interest from people who aren't really sure what they want to accomplish, and it's tough because you kind of have to have some sort of goals if you want to reach them. So, but we'll sit down and discuss it. Sometimes that's the best thing, and oftentimes, especially with clients, we're discussing what's happening, and that's all you really needed. Just a reminder, here's why we're doing what we're doing. This is the thought process, and oftentimes, people go, "Oh, yeah, I remember now," because it's that's a lot, quite frankly. I can't believe how much markets continuously. I mean, I thought they would stop changing. The basics have not changed a lot over time, but executing the strategies has changed dramatically, and it keeps changing. I can remember a time when even mutual funds weren't all that popular, and that blows my mind. Now, I think 95% of the money is done by funds, either exchange traded or mutual funds, and that's pretty mind-boggling. That has really changed the way that stock prices move, but that's okay. That's why you have strategies, and it creates jobs for people like us. Sit there and have to, or you should be studying it, just trying to keep up with what's actually happening. And it's funny, I don't get a whole lot of people anymore who want to do individual stocks. I get some, but when they realize how much work is involved, even on their end, even if I'm the one that's doing all the work, just the work of logging in and keeping up with it, watching it, is a lot of effort for a lot of people. But and I get that. I wish I could wave my magic wand and make everybody's dreams come true. Not sure if that's I am sure that is never going to happen. But you do the best you can. Right now, I think there are great opportunities. Here's the 60-year-old. I pull this up on the website. 60 years old, wants to. Let's see. I know how much income can generate. So somebody that's 60 and is going to take out money in 7 years. Let's do 61. That's actually where I'm at. Take out money in 7 years. So by the time I'm ready for full Social Security, I'll be able to take, for every $100,000 I got put away, I'll be able to get $11,697 in that product. So 7 years from now, $11,697. I started mine a couple of years ago, by the way, so mine's actually going to be a little bit higher. But and I've got more than one. But the bottom line is that is a heck of a rate, and that doesn't matter. You know, what happens in the stock market? You're putting in $1,000 or $100,000, and you're going to get close to $12,000 a year. That's the worst case scenario. Yeah, I'm in. So, but it's not for everybody. Again, you've got to sit down and talk to your advisors, figure out if it fits your particular lifestyle and what you need to get done. And with that, I'm just going to invite you to call BullingtonCapital.com, 330-664-0700. Always enjoy doing these shows. I'm here every Saturday morning from 11 to noon. Have a good weekend, everybody. Good investing, and good luck.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.